What's going on, and welcome back to Trading Options Network. We are in for our end of the week recap, but as always, let's go ahead and get our disclaimer out of the way. Everything we discuss is solely my opinion, not the opinion of Trading Options Network. But do with the information what you will, but simply take responsibility for your actions. Of course, be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with everything that is Trading Options Network, including tips of the day, stocks of the day, and more. That being said, let's go ahead and just kind of give a brief glance at what happened this past week. NVIDIA, Salesforce, and CrowdStrike. And then on Thursday, it was Dell had their, and Lululemon. I actually didn't even see that one. Lulu, the only reason I'm pointing it out is because Lulu can be somewhat, gosh, why can't I think of the word right now? Volatile. But that being said, there wasn't a lot. What I found interesting this past week with all these companies that have done their earnings this past week, specifically NVIDIA, was that none of them really did anything. And to me, the fact that none of these stocks are moving anywhere, especially NVIDIA, Salesforce, CrowdStrike, all these companies tend to be very volatile when they have their earnings. They really didn't do a lot this past week. This pretty much tells me that there is a lot more than just these earnings that people are paying attention to. And that is mainly the interest rates. Okay, are we getting a cut? Are we not getting a cut? I think that is the main thing people are waiting for, and this market is not going to do anything until we find out at the next FOMC if we're getting a cut or not. I think we're going to be pretty much sideways personally until then, and I don't think anything else is really going to move the market much until we get that announcement. That being said, this coming week, we do have a couple of companies that are fun to pay attention to during earnings. One of them being Dollar Tree. Dollar Tree is pretty volatile when it comes to their earnings. And then Broadcom and DocuSign. Both of them can actually be quite volatile as well. But again, based on what we saw this past week, specifically with NVIDIA again, the fact that we haven't really done much with these earnings tells me that people really don't care about earnings right now. And truth be told, most of the bigger companies anyways that will have more of an impact on the actual market itself has already been come and gone. So unless you wanted to, gamble, I guess you could say, for looks like I'm getting a random thing popping up here. Unless you're the type of person that likes to gamble a small amount just to see if you can, get a nice return on any of these with a big movement. I'm not one of those people. Again, there's really not much going on with earnings. In terms of the financial data that came out last week, we had the preliminary GDP, which was higher than expected. And then unemployment claims a little bit lower than expected. Both of those technically are good for the market. Again, right now we're in that season where good news is great news and bad news is still kind of good news. So I'm not surprised on Thursday we had a nice rally in the market. Friday core PCE came out pretty much exactly as expected. So Friday didn't have much of a movement at all. Now, if PCE had come out either high or low, believe it or not, I think we would have gone up more. But that being said, it came in right at what was expected, so we didn't have a huge movement on Friday. Next week, though, next week's going to be fun. It's going to be a new month. And, of course, we have the manufacturing PMI as well as the services PMI Monday and Thursday. Tuesday and Thursday, respectively. We're off on Monday. PMI, of course, is the producer manufacturing index, I believe. Purchasing managers index. Gosh, I'm getting them all confused. Purchasing managers index. Basically, it's how much money is going into everything. If it's over 50, that's typically good. If it's under 50, that's bad. Again, if it's over 50, that means expansion. Under 50 is contraction. So manufacturing PMI, we're expecting more of a contraction. Less of a contraction as the previous data. That's what we're expecting, but a contraction nonetheless. However, services is on the opposite end of the spectrum. We're expecting to be over 50, so we're expecting an expansion. However, we do expect that expansion to be a smaller expansion than previously recorded. So it looks like both are trying to, work its way towards that 50 number. But nonetheless, we'll see what happens with these numbers. I mean, obviously they can come out and this could be way low, way high, and this could be way low and way high, and it just throws everybody for a loop. That's the exciting thing about the market is we never know what's going to come. Of course, the JOLTS job openings is coming. We're looking for a decrease of the job openings, which would make sense considering we have less people filing for unemployment according to last week's data. The ADP non-farm employment change, we're expecting an increase. Again, that kind of makes sense based on previous numbers. And then average hourly earnings. Now, this is the one that I'm actually really, really interested in, even more so than the unemployment rate because that comes out weekly anyways. But the average hourly earnings, we're looking at it, we're expecting an increase. Now, I want you to think for a second. If you're running a business and it is costing you more money to run this business, what are you probably going to do? Well, if you answered raise prices, you're probably right. So this is a leading indicator of inflation. And as long as we continue to increase hourly earnings, we have to continue to watch out for inflation. So my personal opinion, do I think Jerome Powell is going to be paying attention just to this number? No, of course not. But do I think this is a number that he is going to be paying attention to? Absolutely. And let's say it comes out even hotter than 0.3. Then what should we expect in regards to interest rates? Don't get me wrong. The PMI numbers as well, he's going to be paying attention to the unemployment changes or the employment changes, all that stuff. Of course, the GDP and the PCE, all that stuff. I'm sorry, I said PCE. It is PCE. I'm sorry. All these letters, I'm throwing myself for a loop. But that being said, he's going to be paying attention to all of them. But God forbid, if this average hourly earnings comes in really hot, then we have to expect inflation to be, the next CPI and PPI numbers to come in a little bit hotter. We have to. And Powell's not going to like that. So we'll see what happens with these numbers. Maybe it comes in low. And I'll bet if this comes in under 0.3, then next Friday is going to be a massively green day, especially if these other, the non-farm employment changes, any unemployment rate also come in, what the market would like to see. Next Friday could be a huge, huge day. But that being said, let's take a look at what happened this past week. So overall, we have a lot more companies that are green than red. But that being said, the ones that are red are bigger. So they're going to have more weight. And we're going to see that right here. Now, take a look at this. This last candle is all of last week. It is a doji, dragonfly doji, or hanging man doji, however you want to call it. We basically went nowhere all week. And that's pretty much what I said earlier in the week during one of our trainings is I don't expect to do much over the next couple of weeks. Well, sure enough, this past week, we didn't do much of anything. We went down a little bit and then came right back up. Mainly that push back up was mainly Thursday. Thursday is what brought us back up. If we go ahead and look at the daily charts, I stand corrected. You know what? I do stand corrected. It was mainly Friday where it came right back up. So we actually went down, just ever so slightly, and then Friday went right back up. Okay? But nonetheless, we do look at the week. We went pretty much nowhere. Now, this is where, again, trading becomes an interesting thing, because according to the weekly chart, this is a perfect representation of us expecting a pullback. Not to mention, it's a double top. So we could very, very easily say we're opening up a bear position just solely based off of the weekly chart. Very easily say that. On the daily chart, however, it paints a different picture. We have the 20 about to cross the 50. The Friday's candle was a nice candle. If we go ahead and pull up the CCI and the MACD really quick. There we go. All right, CCI itself is more bearish than, more bullish than anything. We could very easily cross this this 100 level and just move on to a new high here in the CCI. MACD, I would say it's more neutral than anything. I mean, you can argue that the darker line here, it was going to cross the actual MACD line, but Friday made it reverse. It really did. So we can argue that this is more bullish than bearish. But bottom line is, if we take a look at the daily chart looks way better than the weekly chart. The weekly chart is suggesting a pullback. The daily chart is suggesting a breakout. So who knows what's going to happen? Again, ultimately, I would not be surprised if we finished next week very similar to this past week. Maybe based on the weekly chart, maybe we have a slight red candle. But based on this daily chart, I would not be surprised if we did try and battle for new all-time highs. 565.18, I think, was the actual high, if I recall. 565.16. We got close. We were within $1, but we didn't quite hit it yet. I would not be surprised based on the daily chart if we did go fight for the new all-time highs and even break out into new all-time highs. But who knows? We could do that. We could very easily do that and then come back down here. Okay? We'll see what happens. Time will tell. Now, the RSP, the equally weighted ETF, again, this is essentially suggesting that all these companies that make up the S&P are an equal weight. So essentially, what would that be? 0.4, right? No, 0.2. If every single company represented 0.2% of the S&P, as opposed to, say, NVIDIA or Microsoft, that is like, 7% or something like that. This looks a lot stronger. This looks like there are a lot more companies that want to push higher than there are companies that want to pull back. And again, that makes total sense if we go ahead and look at the map. Most of the companies are green, but the companies that are red, especially NVIDIA, are a lot bigger than these other companies that are mainly green. So overall, yeah, there are a lot more companies that showed growth this past week. But the companies that, for lack of a better term, the companies that really matter, they were mainly red. So when we look at the S&P, we're pretty much flat for the week. Again, if we look at the weekly candle, again, it is almost perfectly flat. But if we look at the equal weight, even if we look at the week, that's pretty strong. Okay, it's not as strong as the past few weeks, but then again, we were climbing out of a big pullback. So we had 3 weeks consecutively that were very strong. But nonetheless, we went down here, and then on Friday, everything brought it right back up, and we finished towards the top of that candle. So that's still bullish. It's still very, very bullish. So who knows what's going to happen? Again, I don't have a crystal ball. The weekly chart suggests to be a little bit more bearish, but the daily chart suggests to be a little bit more bullish. So what does that tell you? That tells you, well, it tells me at least, I'm not going to be doing anything super crazy. I do have some stocks on my watch list that if you do follow me on Facebook, Instagram, or TikTok, you'll see my stocks of the day. I am watching those. I think those could be some decent, opportunities For example, I'll pull up JCI is one that I really like, especially how it finished on Friday. Johnson Controls International. I'm on the weekly chart. Let me go back to that daily chart. So I talked about how here we were at, it's been at this, challenging this resistance line quite a few times. So it popped up here and then it broke, it went right back down. So that was a fake out. It tried to battle it here, but was rejected. Gapped up really high on earnings, but check it out. It sold off and finished below this resistance line. And then the very next day, it tried to go back up and was sold off. So that's another rejection, okay? Or a fake out. Well, we just went back over it again. I keep mentioning that I want to see this line turn into support once we get over it next. And after all these attempts, I would not be surprised if that happened. So Monday or Tuesday, unless this gaps down on Monday and we're immediately right back below it, if we open up essentially anywhere above this, I might open up a vertical spread, maybe a couple weeks to a month out. So it gives it some time. So just in case it does pull back and bounce off of this as a support line now, pardon me, we could still see a nice return on our investment. So maybe like if I squeeze this down a little bit, maybe we can battle these previous highs at 75. Maybe we could do a 72, 75 vertical spread. I would not be surprised if we got some really, really nice premium there. Let's see. I'm going to pull it up here on my phone just to get an idea. All right, so first and foremost, they do have monthlies. And they have 250s as well. So potentially 20 days out. So essentially 3 Fridays from now would be expiration. And we can do a 72.50, 75 vertical. And that 72.50, 75 vertical would cost right around $1.10. So we'd be getting about $1. It would cost us about $1.10 of risk for about $1.40 of reward. And I really, really like this chart. So I like that setup. I really do. So don't be surprised if you see a notification, if you're a Platinum member, that we're opening up a vertical on JCI for the next monthly expiration. Yeah. I'm just looking at the numbers really quick one last time. But JCI, keep an eye out for it. That being said, again, I probably will not be doing too much. I'm waiting myself. I'm waiting for the next FOMC, see what happens with rate cuts, assuming we are getting one. I mean, the market has definitely priced one in. Now, this is what I'm going to find interesting. I'm just going to say this last thing before I end this. I'm very interested to see what happens, assuming we do get a rate cut, because historically, rate cuts are actually bad for the market. Rate cuts do typically come with a recession. So if we do get a rate cut, will the market be excited for it and shoot up, or will it have its, negative connotation and cause the market to sell off? Or will we gap up and then sell off throughout the day? I'm really, really curious to see what's going to happen on the day we do have our first rate cut. I will say if we don't get a rate cut, I can guarantee you the market will not like that at all and will definitely go down. But, it's an interesting place to be because, hey, if we get a rate cut, everyone's happy, the market goes down. That wouldn't really make much sense now, would it? But historically, that's what would happen. So it's almost like we're damned if we do and we're damned if we don't. But we'll see what happens. Again, that's all we could do. We have to have patience in this business. If you want to make it as a trader, you have to have patience. You can't, just do things out on a whim. That's how you're going to get crushed. But all we can do is continue to get better, continue to learn from one another, and hopefully not make any mistakes or make fewer and fewer mistakes as we get better as we go along. So that being said, I hope you guys have a great weekend, and we'll talk to you soon. Take care.